Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, C.S.K. Khanna from the SD Vidya School. Dear students, today we will continue our previous lesson of issue of debentures. In that lesson, we had shared and learned how a company can issue the debentures under the different conditions. And two important conditions we had learned, that issue of debentures for cash and issue of debentures for other than cash consideration. There may be the other third condition, situation in which the company can issue the debentures. They are known as the issue of debentures as collateral security. First of all, we must understand the meaning of the word collateral security. Collateral security means some additional security or sub-secondary security which is given in addition to the principal or the first security. Generally, when the company takes loans from the financial institutions or banks, the financial institutions, in order to secure themselves, that company must make the payment of their loans to them, they demand for some additional or secondary security. Principal security is already given to them. For example, land, plant, building is mortgaged, but those financial institutions, in order to compulsory assure to themselves that the company must make the payment of its debt, they demand for some additional or secondary security. So, issue of additional or secondary security to these financial institutions is generally made by the companies in the form of allotment of debentures. Now, when these debentures are issued to those financial institutions, they becomes the creditor of the company, and in case when company fails to make the payment of their dues, their loan, they can take it as a creditor with the help of the court if situation arise to them. So please understand the meaning of the collateral security. Collateral security means some additional or supplement or secondary security which is given by a company to the banks or to the financial institutions from whom it has taken the loan, that is known as the collateral security, and debentures are issued to them. So this is called as the issue of debenture as collateral security. Now, when the company issue debenture as in collateral security, there are two accounting methods to deal with them. First method say, generally no entry is recorded in the books of account and debentures as not actually issued to them, so the entry will be there only for taking the loan from the financial institution. Entry will be bank account debit to bank loan account, and only the entry will be recorded for taking the loan. You see here it is mentioned that as per the first method, no journal entry to be made in the books of account of the company, as debentures are actually not issued. So as they are issued only as a collateral security, so only one entry will be recorded, that is relating to bank account debit to bank loan account, that is for taking up of the loan. Now there may be the second option, second method by which the issue of debenture as collateral security may be recorded. That includes the two entries. In this case, first entry will be regarded for taking up of the loan, that is bank account debit to bank loan account, and second entry will be recorded on issuing the debenture as collateral security. Debenture suspense account will be debited to debentures account. Now, debenture suspense account will be shown in the balance sheet as a deduction from the debenture account in the liability side, which is called as equity and liability side, and debentures are already shown in the liability side. Very simply, once again, I tell you, according to this method, two entries will be recorded. First entry will be relating to the loan, entry will be bank account debit to bank loan account, and second entry will be, that is debenture suspense account debit to debentures account. Now debentures account, how it will be reflected in the balance sheet? It will be shown as a part of deduction from the debenture account on the equity and liability side, and narration will be mentioned over there, that being the issue of debentures of rupees so and so as collateral security to the financial institution. So this way we can record the entries with reference to the issue of debentures as collateral security under two methods. I will continue in my next video relating to the other aspects of issue of debentures.